Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. US President Donald Trump has threatened Iran with the use of overwhelming force in response to any provocation. Dewan Housing Finance has repaid only part of the commercial paper that was up for redemption yesterday. 12 investors of that paper have been paid on a proportional basis. Kerala retained its spot as the healthiest state on the Niti Aayog's health index, followed by Andhra Pradesh and Maharashtra. Uttar Pradesh was placed last. US Secretary of State Mike Pompeo arrived in India for a two-day visit. He will meet External Affairs Minister S. Jaishankar later today. And Asian markets opened mixed after Fed Chair Jerome Powell warned of rising downside risks to the US economy, along with dwindling prospects of a trade deal. Let's talk about the action on Wall Street first, where stocks ended lower on Tuesday. US Federal Reserve Chairman Jerome Powell said that the downside risks to the US economy have risen. Risk-off sentiment was also bolstered on account of the rising geopolitical tensions between the US and Iran. Macro data reported last night was also weak. Renita Young of Bloomberg News tells you more in this report.
It was a risk-off tone on Tuesday, with the S&P 500 closing almost 1% lower and all other major indices closing down as well. This happened as U.S. Federal Reserve Chair Jerome Powell said that there's definitely some downside risks to the U.S. economy. We also saw some fresh data coming out of the United States that underscored that fact. And there's still some concern about U.S.-China relations and U.S.-Iranian relations. We know that U.S. President Donald Trump and Chinese President Xi Jinping are set to meet at the G20 summit later this week, but Trump administration officials say there's unlikely to be any trade deal between the United States and China. Now, new U.S. home sales fell for the fifth straight month, for a 5-month low rather, and that was below analyst estimates in the United States. And we saw rising risks, including geopolitical tensions, really boosting investment into safe havens like gold, which saw above $1,400 an ounce. That signals that investors are definitely more concerned and want to store the value of their assets. We also saw Bitcoin staying above that $11,000 range, or $11,000 area rather. And meanwhile, we did see quite a few movers in markets in the form of deals. We know that Botox maker Allergan was the highest, or up the most, since February 1993, after company AbbVie confirmed that it will be buying Allergan. And we saw that the peers of that industry were also in sympathy higher with that company. And that's a look at your Tuesday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
Now, Jerome Powell will speak again today in New York, and a lot of investors will watch for what he says with regard to the economy, and that Q&A session that will take place also will be interesting to watch. But for now, let's turn to the Asian market. Sophie Kamruddin is joining us from the Bloomberg studios in Hong Kong. Good morning, Sophie. How are we looking in Asia this morning?
Well, this morning, Asian stocks are set for a second day of losses, while the U.S. dollar is rising and treasuries are extending declines in the wake of Fed commentary that reiterated the case for an insurance rate cut for the United States. So that is driving a drop in treasuries, with losses led by the front end. 5-year yields earlier rose as much as 3 basis points. And in the forex space, we have the Thai baht leading the drop in emerging currencies, but not straying too far from a 6-year high, which adds to the case for the Bank of Thailand to eventually ease monetary policy. And the Kiwi dollar is under pressure ahead of the RBNZ decision. Now, both central banks are expected to stand pat today. Now, I want to mention oil, which is jumping on that surprise rise in U.S. supplies and Mideast tensions. Plus, semiconductor names are climbing in Tokyo and Seoul after Micron beat third quarter estimates and said it resumed some shipments to Huawei. But that is not shaking off the broad risk-off mood, with the Nikkei 225 and Kospi both falling for a second session. And stocks in Hong Kong as well as in Shanghai are also extending declines. China Merchants Bank continuing to slide, both the H&A shares on alleged violations of North Korean sanctions. Back to you.
Thanks so much for that, Sophie. Now, oil prices are in focus and have risen in today's session after US stockpiles dropped unexpectedly. Prices have risen close to 10% in the last 1 week. The rise in prices, along with the rising geopolitical tensions between the US and Iran, will act as the backdrop for the meeting between the OPEC and its allies, which is scheduled to take place in Vienna next week. Adam Clark of Bloomberg News brings you more.
Yeah, well, I think the primary factor today why oil is up, it rose, West Texas Intermediate rose as much as 1.8% earlier today, is just the inventory drop. The American Petroleum Institute reporting that U.S. inventories fell by 7.55 million barrels last week. That's about double what analysts were expecting. And I think, traders are going to wait and see what the U.S. government reports. Their inventory report is out later today. But if you see, if those reports seem to agree, and the U.S. government report sort of ratifies what the API numbers show, it really suggests that U.S. demand is coming back. Oil demand is rising. That could be because of more summer driving, from drivers or stronger economic activity. But it really suggests that U.S. demand is coming back.
And of course, we have the ongoing geopolitical tensions between Iran and the U.S., not to mention the OPEC meeting coming up next week. Does this just signal that prices may continue to go up?
Yeah, well, that's exactly right. That's the backdrop for this. Of course, the U.S.-Iran tensions have contributed to oil's rise. WTI rose more than 9% last week. There's a lot of concern about supply disruptions out of the Middle East if tensions between the U.S. and Iran continue to simmer and spill over. The other factor, like you said, is the upcoming OPEC meeting. There's still a lot of uncertainty around that. A few weeks ago, it seemed quite certain that OPEC was going to decide to extend their production cuts that have run through the first half of this year. They're scheduled to meet next week, I believe, in Vienna. But now Alexander Novak, the Russian oil energy minister, was a little bit hesitant about committing to those cuts. Russia's taking a wait-and-see approach. Putin and Saudi Arabia's Crown Prince Mohammed bin Salman are scheduled to meet on the sidelines of the G20 in Japan later this week. So all eyes are going to be on them to see if there's any announcements or any agreement about these the future OPEC Plus plans to extend, if they plan to extend these cuts into the second half of this year.
All right, so that meeting is going to be a crucial one to watch for. Let's now turn our focus to another meeting, the upcoming G20 summit. Sources have told Bloomberg that the U.S. is willing to delay the next round of tariffs on $300 billion worth of Chinese goods. This comes ahead of the prospective meeting between Trump and Xi Jinping at that G20 summit. However, the U.S. isn't willing to grant any further concessions to China. Sarah McGregor of Bloomberg News brings you more.
we do know is that Trump and Xi are set to meet on Saturday, which is the final day of the G20 summit in Japan. And what our sources are telling us is that the Trump administration is seriously considering holding off on imposing tariffs on $300 billion of Chinese goods, ahead of this meeting. And of course, that was the promise that China wanted to even sit down at the table. Trump was really the one that was pushing for this meeting at the G20 with Xi, and that was a condition. But the U.S. isn't willing to give any other tariff reprieve to China just around this meeting with Trump and Xi. So that means, they won't be rolling back or promising to roll back the existing tariffs. And so we're really going to have to see what goes down at this meeting. You really have to believe that if Trump doesn't get along with Xi, they can't find some agreement, will the U.S. really hold off much longer on these tariffs on $300 billion of good, which is the big question hanging over the world economy right now?
Yeah, you could be forgiven for thinking that this is just the G2 meeting, but there's 18 other nations there, all with a stake in this as the collateral damage spreads. We've got the Australian Prime Minister here in the Bloomberg Bureau in Sydney giving a speech today. He's saying that countries like Australia just can't sit around. It's in no one's interest for this the competitiveness between the US and China to continue. So are some of these other nations going to bring a bit of pressure to bear as well this weekend?
Absolutely. I think, it's often, whether it's the IMF or our own economists here at Bloomberg, they cite trade risks. It's one of the biggest clouds hanging over the global economy right now. A lot of their forecasts have priced in, obviously, the trade actions that have been made so far. But if things escalate, there's a lot of warnings about how dire the situation can get. And you can bet that will, of course, affect economies like Australia and elsewhere around the world. We also have a story out that Sean Donnan, our senior trade reporter, wrote that shows that Chinese imports have fallen from countries like Japan and South Korea over the past month. And that's just one sign of global supply chains that are shifting around right now as companies rethink, their investments and where they're sourcing their products given this tariff war.
All right. Well, let's turn to the Indian markets where there's been a lot of seesaws. Agam Vakil is here to tell you all about the day trade and what's happening in the futures and options space. Agam, well, a lot hinges in terms of global politics on that meeting between Trump and Xi Jinping. That'll happen later this week. What are we looking at here today?
It's becoming very, very confusing to make of the cues, Alex, because we don't have any triggers locally. And it's really hard to make anything of what's coming around when it comes to, the trade tensions between the US and China, or for that matter, plenty of other things across Europe that includes Brexit. But for now, the SGX Nifty is indicating, some amount of weakness. Again, you can't really go by that one. Let's take a look at how our markets did yesterday, and actually, because we did see about a 1% gain coming in through mid-cap and the small-cap indices, and the broader markets also doing well. And again, strength was evident in the markets across. The advanced decline ratio was a big positive, of course, to take away. But that brings me to the ADRs and take a look at how that one is done. So, we are looking at gains across ADRs, and we do have something like marginal weakness in something like Vedanta, Infosys, and HDFC Bank. So, not too much to speak for. Let's move on and talk about your FII flows. And despite the fact that we did see that 1% gain coming through, we really didn't. That really didn't. Come back to FIIs or DIs for that matter. Though DIs did buy stock worth around 984 crores. But let's move on and talk about the contributors, and the stocks which were bearing down on the indices day before are advancing, and so Reliance Industries, HDFC Limited, Axis Bank, all of them were lifting the indices higher. But it is expiry week, and in fact the penultimate day of expiry, we are looking at 38% rollovers, slightly lower than the previous 3 months average so far. And again, we are looking at 32% rollovers as far as the Nifty Bank is concerned. Now, pardon me. We're looking at a 300-point range between 11,700 and 12,000. Again, not too much change there, but in terms of changes in open interest, again, unwinding coming through around the 11,700 and 11,800 calls, assuming, and of course, given that we did see the Nifty move up. The VIX came off to a certain extent, still at the mark of 15, and also at reasonably low levels, much lower than what we have been used to off late. Nifty put call ratio edging up higher to around 1.5. And moving on to stocks which are in the F&O band, we have IDBI Bank, Jet Airways, and Reliance Capital and Adani Power. And of course, Reliance Infra has moved out of the F&O band. And in terms of other stocks, keeping an eye on Torrent Power, CESC, NTPC, Berger Paints, all looking at surge in OI. In terms of unwinding, Balkrishna Industries, Hexaware, and Repco Home Finance, looking at some amount of declines in open interest. So we'll be watching out for that. And again, Alex, as usual, we're keeping an eye on stocks, not as much as, the index.
All right. Thanks so much for that, Agam. Let's take a look at what's making headlines across the globe. Ritika Gupta of Bloomberg News brings you the first word headlines.
President Trump is threatening Iran with overwhelming force if it attacks any U.S. target. Relations between Washington and Tehran continue to crumble, with the president even using the word obliteration. He was responding to Iran's warning that the path to a diplomatic solution has now closed after the U.S. imposed sanctions against Ayatollah Ali Khamenei. Tehran accused Washington of being retarded.
This means the certain failure and defeat of the United States. I do not have any doubt about that. The Americans have become confused and they do strange things that no wise person in the history of politics has done. The White House has a mental disorder.
Trade war tensions hit 3 top Chinese banks, with shares tumbling after a US media report suggested they may be caught up in an inquiry into claimed violations of sanctions against North Korea. China merchants Bocom and Shanghai Pudong all fell after the Washington Post said a US judge has found 3 unidentified Chinese banks in contempt for refusing to comply with the investigation. Hong Kong leader Carrie Lam's popularity has slumped amid mass protests against her controversial extradition bill. In a University of Hong Kong public poll, her approval rating dropped to a record low of 23%, while support for her government is the lowest since 2003. Meanwhile, the UK is suspending sales of tear gas and crowd control equipment to Hong Kong until an inquiry is held into alleged police brutality at protests earlier this month. Global news, 24 hours a day, on air and at TikTok on Twitter. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
All right. Sorry. Well, the mutual fund industry came under a lot of flack for granting Essel Group promoters time till September to pay up the outstanding amount that was due to them. But it's not just the mutual fund industry that stands at risk as of now. A group company, Z Entertainment no less, had also lent money to the 2 companies which have entered into a standstill agreement with these mutual funds. That too at a time when these companies were not performing very well. Aman Kapadia, who's gone through all of the filings to get the details, lists out how much was lent to the group companies.
Z Entertainment's promoters are desperately looking for a buyer, and a transaction could actually help Z recover its loan to Essel Group companies. The flagship company lent a total of 159 crore in last financial year to 3 promoter entities, Widescreen Holdings, Conti Infra Power and Edison's Infra Power. While intergroup borrowings are not uncommon, what's interesting is that loans were extended to these companies despite them reporting substantial losses and little or no revenue in FY18. 2 of the 3 companies, Conti Infra Power and Edison's Infra Power, are in fact the very companies that have entered into standstill agreements with the mutual fund houses. Kotak Mutual Fund has not been able to repay its unit holders in full, and HDFC Mutual Fund has had to roll over a scheme and delay the repayment. It's also worth noting that a large chunk of the borrowings made by these 2 companies were via promoter pledges in Z Entertainment.
All right, you'll find that entire story on the website bloombergquint.com. It's quite detailed, so you should check that out. Mishika Parak is joining us now to tell you all about the stocks and news. Morning, Mishika. What's on your list today?
Good morning, Alex. Well, there are a number of stocks that we need to look at today. The first one being DHFL. Now, the company's made only a part payment of the commercial papers up for due for redemption on Tuesday. They've paid up 150 crores towards the maturity of the CPs, whereas the total payment to be made was 375 crores. DHFL says that the balance 225 crores will be paid over the next few days once the surplus cash flow position of the company improves. Then we have Reliance Power. ICRA downgraded the long-term and short-term ratings of Sasan Power, and outlook changes to negative from stable. The downgrade was due to the deterioration in the financial risk profile of Reliance Power, and the company strongly disagrees with the revised ratings assigned by ICRA. They believe that ICRA is not appropriately factored in the company's strengths while assigning the revised ratings. Well, we have another downgrade on the list. There's Reliance Capital. Brickwork Ratings downgraded long-term debt program and market-linked debentures ratings to BBB from A. Short-term debt program has been downgraded to A3 from A2+. Now, Brickwork has stated this action was primarily due to the limited growth prospects of the group of companies and due to the uncertainties of the impact from the issues raised by PwC, the statutory auditor, and their subsequent resignation. The company protests and disagrees with the revision in ratings. Next stock on the list is Adani Power. A consortium of lenders led by Axis Bank have approved the resolution plan to acquire GMR Chhattisgarh Energy. Post-transaction, Adani Power shall hold 100% equity stake, of which 52% stake is to be acquired from the lenders, whereas 48% is from GMR Group. GCEL owns an operational 1.37 megawatt supercritical thermal power plant in Raikheda, Raipur district of Chhattisgarh, and the plant consists of 2 units of 685 megawatts each, commissioned in June 2015 and April 2016 respectively. Godrej Properties plans to raise 2,100 crores via QIP at a price range of 912 and 928 rupees. The firm plans to use these funds for working capital needs, repay debt and to invest in its units. The QIP is done at a discount of 5.5 to 7.1% to the current market price, and it will lead to an equity dilution of 9% on the expanded equity base. Lastly, let's have a look at the important bulk deal. Red Bloom Investments, which is an arm of Warburg Pincus, sells 1.4 crore shares of ICICI Lombard via bulk deal, and Society General buys 29.7 lakh shares of ICICI Lombard.
All right, thanks so much for that, Mishika. Now, United States Secretary of State Michael Pompeo arrived in New Delhi late last night. Pompeo's 3-day visit is aimed at deepening the strategic relationship between the two countries, according to a U.S. State Department fact sheet that was released yesterday. Noting that the United States and India are natural strategic partners, it said that President Donald Trump and Prime Minister Narendra Modi are firmly committed to accelerating the upward trajectory of this partnership. Pompeo's visit marks the 3rd visit to India by a Secretary of State during the Trump administration. And after his India visit, Pompeo is set to travel to Japan to attend the G20 summit with Trump. All right, Elon Musk's SpaceX launched its Falcon Heavy rocket successfully. Although after a 3-hour delay, the rocket and the payload rumbled aloft at 2:30 a.m. local time from NASA's Kennedy Space Center in Florida. Take a look. You'll find several stories, several videos just like that one on the Bloomberg Quint website. Let me tell you about a couple more stories that you should consider reading. A Reserve Bank of India appointed committee has recommended that loan limits under the Micro Units Development and Refinance Agency, that's the Mudra scheme, be raised to 20 lakh from the current 10 lakh. It also suggested that loans of up to 5 crore rupees be eligible for online sanction via the web portal psbloansin59minutes.com, and that actually exists, I checked. And in a report released by the Niti Aayog yesterday, Kerala retained its spot as the healthiest state on the state-wise healthcare rankings, while Uttar Pradesh stood at the bottom. Kerala was followed by Andhra Pradesh and Maharashtra in terms of overall performance in the health sector, according to the report titled Healthy States Progressive India Report on Rank of States and UTS. All right, that's all that you need to know going to trade today. Do stay tuned. A lot of you are interested in stock-specific information. We'll find a lot of that over the course of the day, specifically at 12:30 on Ask BQ. Thanks so much for watching. This is Bloomberg Quint.